Good morning, ladies and gentlemen. This is Butch Shorak. It's Monday, May 27th, 2013, and a happy holidays to all of you. Oh, with that thought in mind, let's take a look and see what happened during the last week in the market. We see that we're closed for Memorial Day on Monday, and we'll begin again on Tuesday, given a 3-day weekend for us on this mighty big Memorial Day. With that thought in mind, access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. Looking at the last week, look at what we got when we look at the Dow, the NASDAQ, and the S&P 500. Also looking at the Russell 2000. For the first time in a long time, what we see here is negative numbers. Dow down very little for the week at 0.3%. Everything else over 1% for the week, as we see the first pullback that we can remember in quite some time. The upward trend certainly still is intact, but we see we finally had a pullback. Let's take a look at economic announcements for the week, as we see that Monday is Memorial Day, and a happy Memorial Day to each and every one of you. And then let's see what happens on Tuesday, as we see Case-Shiller coming out at 9 o'clock. We see consumer confidence coming out at 10. Richmond Fed manufacturing coming out at 10. And we've got the Dallas Fed manufacturing survey coming out at 10:30. So a bit of news on Tuesday as we jump back in for this 4-day week. Looking at Wednesday, we see really nothing of importance whatsoever. And then we come into Thursday and we see big numbers looking for or coming out of GDP. We look at jobless claims, which we have every single week, and we see we have the pending home sales coming out at 10 o'clock on Thursday. And then finally at Friday, we got personal income and outlays, and we got Chicago PMI and that all-important consumer sentiment coming out after the market opens. So we see that it might be a 4-day week, but only one of the days this week looks a little dull, as the others certainly have things that can move the market. Looking at the S&P, we see that we are still definitely in an uptrend. Notice we're still above that 30-day moving average, above the 50-day moving average. Way down there is the 200-day moving average, which is sitting right around 1480, 1485, somewhere in that range. So we see that market is still moving up as we're having what do we call a normal pullback. This is what markets do. Expectations, we're going to pull back to. Well, we're looking for a pullback somewhere around this 1600 level. We'll see whether that actually happens or not. Looking at the last week, we see that as the week went on, we kind of flattened out on Monday. We ended up with that what looks like a doji, and then we see we got a higher high on Tuesday, and Wednesday we even got a higher high. But notice we're starting to show that weakness, closing and changing momentum as we went into a downward cycle in this upward trending market. And we saw that Wednesday, Thursday, and Friday going into that 3-day weekend showed us some weakness, but not total weakness, as we still ended up closing near the high of the day as we went into Friday afternoon and that close. All right, so we see, let's see what the Dow did, looking very much the same. We see the Dow showed more relative strength than the others did, down only 0.3%, as we see some solid movement taking place and consolidating. It looks more like a consolidation rather than a downward cycle in the Dow, even though we did get lower highs and lower lows. Dow showing good strength as we move forward into the next week. All right, NASDAQ, looking at the NASDAQ is very similar, and we see that we're sitting basically right around support. Our previous high is up there, providing the little bit of resistance we have. Still a bit of ways to go if it does pull back to the 30-day moving average. Right there around 15,000, might go back down and retest that number. Looking at the Russell 2000, we see that we had a big day down on Wednesday, and then as we went into Thursday and Friday, we had a bit of a bounce, closing at the high of the day on each of those 2 days. And we finally got that 30 above the 50 in the Russell 2000, which is what we really like to see on bullish stocks or bullish indexes. Then finally looking at the VIXs, we had a bit of a pullback. We got a pull up in the VIX, but you know, for the VIX sitting at 15, we're still very, very much in a very safe haven where we're not seeing a lot of fear coming into that market. Looking at our bonds, that is a shot of the VIX, so that really doesn't show us. But we had a pop out of the bonds as we saw the market pull back. Looking at gold, look at what happened here. We got a little bit of a pop out of gold as we went down and had very close to a double bottom. But gold doesn't seem to be going anyplace fast as that safety haven. Not a whole lot of fear in the market, even in this little pullback. Looking at the volume, what kind of volume do we had? Well, we pulled back on pretty good volume here. Some of the highest volume we've seen since April 15th, as we saw that things did pull back with a bit of gusto as far as volume is concerned. Looking at the financials, we look at XLF, and we see, looking at XLF, we see that it looks very much like the overall market, showing us some consolidation on Thursday and Friday. See whether we want to go down and test that 30-day moving average or not. Looking at oil, taking a look at oil, we see that oil has pulled back. Looking at USO, we see that oil has certainly been in somewhat of a bearish or certainly a sideways trending market, as it seems to be going nowhere. Trading at the bottom of the Bollinger Band this weekend. Notice we're getting to the thinning of that Bollinger Band, and when that thing narrows, we do expect some kind of move one way or the other. The market does shoot up. We could expect that oil will pull back as we go into our next cycle. Remember, overall, when we look at the markets, we are still heading up. We're in an up cycle, and this is just a normal, healthy pullback. We're kind of looking for something around 1,600 out of the S&P. So for those of you that are gold members, stick around, and we'll go through our stocks to watch. For those of you that are not, listen at the end of this video, and you'll find other free videos that you can watch from Options University. With that thought, ladies and gentlemen, we have a shortened week this week with only 4 trading days. And so on Monday, May 27th, 2013, 'tis a holiday, and we want to thank you all for being here, and good luck, good trading in this next week. Thank you. This is Butch Shorak, Options University.